Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. At the end of the trading session, if we see all the three major indices witnessed a dip of about 0.2%. Notably, the Nasdaq and the S&P 500 manifested a candlestick consisting of a small real body and a long upper shadow, signifying presence of sellers at higher levels. This implies that we could witness some consolidation before the next leg of the rally in the markets. Currently, if we see, all the US indices are trading above their short-term and long-term averages. Looking ahead, the S&P 500 must surpass the gap it created in mid-July to continue its upward momentum, potentially testing 5,670, 5,730 as the next targets in the short term. Coming to the update regarding Brent oil. So Brent oil ended at 76.20 with a cut of 1.5% yesterday. Going ahead, the zone of 80 79.8 will act as the immediate resistance for Brent oil, and the prices are headed towards $73 a barrel. This negative trend in Brent crude prices is a positive for oil importing economies such as India. Coming to the update regarding the US dollar index. So the dollar index has breached 101.50 and the major trend of DXY remains bearish. Any sustainable move below the levels of 101.20 will lead to further selling pressure in the index towards the levels of 100.30. Now coming to the update regarding our markets. The benchmark index Nifty promptly filled the gap in a matter of an hour. So the starting for the markets was on an extremely positive side. But post that, if you see, the index witnessed a consolidation for the major part of the day. It remained in an extremely tight range of less than 50 points right through the second half of the session. Going ahead for the markets, the zone of 24,770, 24,800 will act as the immediate hurdle. Any sustainable move above the levels of 24,800 would lead to a continuation of the up move towards the levels of 24,950. On the downside, the zone of 24,560, 24,580 will act as the immediate support for the index. If the index slips below 24,560, the next support for the markets is seen closer towards 24,450 levels. Coming to the derivative data, so in trade yesterday, we witnessed that the August futures closed 0.47% higher, and we witnessed that the cumulative interest, open interest that is, dipped by about 0.3%. Looking at the option chain data, that is for tomorrow's expiry, at the current juncture, if we see, 24,800 has significant call open interest, followed by 24,900, and on the put side, a substantial OI is seen in 24,600, followed by 24,500 strike. For the weekly expiry, the put call ratio is at 1.14, while for the monthly expiry, currently it is at 1.35. Coming to the update regarding Bank Nifty. So in trade on Tuesday, Bank Nifty attempted to catch up with the outperformance for the day compared to Nifty. However, on the daily chart, if you see, it formed a price rejection on the upside, as evidenced by a sizable upper shadow on the newly formed daily candlestick. The silver lining is that it has managed to close above its 20-day EMA, that is the levels of 50,746. It's first in almost a month. Sustaining and persisting above the EMA could suggest a change in short-term sentiment in the index. Going ahead for Bank Nifty, the zone of 50,850, 50,900 will act as a crucial hurdle for the index. Any sustainable move above the levels of 50,900 will lead to a sharp upside towards the mark of 51,500 levels. On the downside, if we see, the psychological mark, that is the levels of 50,500 will act as the immediate support. If there is a breakdown below 50,500, the next support would be seen closer towards 50,200, 50,100 levels. Coming to the data regarding the weekly expiry for Bank Nifty. So we have the PCR, that is for today's expiry, currently at 1.02, and the max pain which is seen at 50,700 strike. While for the August monthly series, we have the put call ratio which is at 0.88. Coming to the advanced decline ratio, the advanced decline ratio is largely positive in trade yesterday, as a lot of mid cap and small cap counters witnessed good traction in trade yesterday. Coming to the key sectors in focus, so we have Nifty IT and Nifty Financial Services, which are likely to outperform in the short term. While on Tuesday, the Nifty FMCG experienced a slight cool down as it now trades less than a percentage away from its all-time high. Coming to the FI/DI data, so FI is sold to the tune of 1,457 crores, while DI is purchased to the tune of 2,252 crores. That's a wrap of today's edition of the podcast. Thank you so much for regularly listening to our podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.